All right, welcome everyone. This is Bob Maury. It is Wednesday, 25th of September, round about 4:30 my time. I want to do a deeper dive into two strategies that have benchmarked recently. Actually, one benchmarked because it already started. One is set to start tomorrow. So we'll see how everything's lining up in terms of entry there. Okay. Let's pop into the portal here, dialing in. You'll see the most current PDF version right here. Click on that, brings it up. This is for this week. And here we go. So we've got the bottom two are the ones I'm referring to. So 322 bull spread in sugar number 11. That's the world sugar price. And 323 bull spread in copper, high grade copper. All right. These are the two I'm looking at. And as you can see, the copper starts tomorrow. So we wait for tomorrow's close. And the first entry for the more aggressive average in traders is going to be tomorrow's close. So be advised of that. Second entry will be a price a little bit lower. So we'll see what the math is on those. And let's hop on over to the charts. All right, first of all, we got the sugar here. So this is number 322. Risk reward profile in yellow. Long to March, short to May. Margin requirement 510. Risk reward, more conservative entry level traders looking to get in at level 2, entry level 2. Risking 381 per spread, either make 683 or 840. And then for the more aggressive average in traders, risking 896 per two lot that you average into to either make 1232 or 1545. If all you do is get that first level and then the market rallies to the first target, then the gain to be about $550. So that's the risk reward profile. Let me give you the backstory on this one. It has been a winning strategy this time of year during this window, 13 out of the last 15 years. The two losing years were 2022 and 2020, so not too long ago. In terms of my analysis, comparing the structure of the charts in those years and the entry prices of those strategies in those losing years compared to the chart in front of you, what matters to us, I don't see a whole lot of correlation either way. And with this massive spike that we've seen in sugar over the last 5 or 6 days, the entry price for our strategy is much higher than what it was in those years past. So not a whole lot of correlation. Therefore, to me, not a whole lot of concern that history might repeat itself. We'll see how that plays out. The strategy is to get long, and we are trying to get long where? Well, the first entry level will be down here at 123. So first of all, this strategy started on the 23rd, and it goes till October 17th. And the closing price on day 0 becomes our benchmark at 150. First level that we're looking to get into is a price improvement about 27 points down to 123. So the benchmark minus 27, 123. Second entry level will be 111. Our stop is going to be at 77. And our target's going to be 172 and 186. Now you can see that today we already broke through that 172, but we're just a couple days into this window. So I'm okay with sticking with this one for now. We'll see how things evolve, through this week and into next. But I wouldn't shrug this one off just because it hit that first target already. They could very well have a break and then rally. The Fibonacci retracements come in at about 122 for the 50% retrace and about 110 for the 618 retrace. So Fibonacci traders might be looking to get on board on a dip. Okay, so that could help us out. We will need to see this thing break though, so something has to come along to lose a bit of the wind in the sails here, shall we say. So market's had a pretty good pop to the upside over the last, let's say, 6-7 trading days. Hasn't been all up. There's been a couple consolidation days in there, so may or may not be running out of steam. It's not like it's all one way. We'll see how that plays out though, right? So that is the spread in sugar. Now, one other thing that we look at is how much room we're given in this particular strategy. So the benchmark is 150. Our stop is 77. That means we have an $817 range between where the strategy started and where our stop is. And that would have been more than ample enough room to stay on board, even if the strategy works against us compared to the last 15 years. So we're good there. All right. So that is strategy number 322, bull spread in sugar. We've got the math on the risk reward. I gave you the backstory on that one. And then we've got our entries and exits all set. So we're all good there. All right. So that is strategy number 322, bull spread in sugar. And then the next one I want to dive deeper into is new ones that's setting up for tomorrow. So this is going to be strategy number 323, bull spread in copper. I'm talking about what's in yellow here. Long December, short May. Margin requirement just shy of $1,000. Risk reward profile for more conservative entry level 2 is risking $250 per spread to either make $450 or $550. And then for the more aggressive average in traders, risking $750 per 2 lot that you average into to either make $650 or $850. All we do is get in at level 1, and then the market gets up to target 1. Then that'd be a $200 gain. And what's the backstory on this one? Well, it's been a winner 13 out of the last 15 years, so kind of like the sugar. The losing years were 2018 and 2016. And similar to sugar, I guess, in terms of me analyzing the chart you're looking at in front of you there with the contracts we'll be trading versus what happened in the losing years of 2018 and 2016. I don't see a whole lot of structure similarities, nor do I see price. So the price today is now much lower than it was back in 16 and 18. And then in 16 and 18, the structure of the chart was much flatter. And you can see that we basically come from up here, before the spread really started gaining some liquidity. And then basically it had a pretty good one-way move up until recently where it's been more sideways. So in those losing years in the past, it was more, I wouldn't say flatline, but more sideways. And we're not coming into this seasonal window looking the same as that. So net, I don't see a whole lot of correlation. Therefore, I don't have a whole lot of concern that history is going to repeat itself for those particular reasons. Our benchmark to stop range is $500. So our benchmark will be tomorrow. The stop is going to be tomorrow's settle minus 200 points. Each point in copper is $2.50. So that'd be a $500 range between the benchmark and the stop. And that would have been enough to stay on board 15 out of the last 15 years. One other note too, this is the widest this spread has been in the last 20 years. So this is an unusually wide extension of this spread, which either means it's supposed to be down here and it's going to go even lower, but we have our stop in case that's the case. Or it means that it's overdone and ripe for a move, steady to a little bit better. We'll see how that plays out. Okay. The year that came closest to this, okay, there was a year that came close to this price. And in that year, the market basically moved sideways to higher. Okay. So I like the way that's all setting up for us in terms of doing that analysis. So what are we looking to do? We're looking to get long. We have to wait for tomorrow's close. So the benchmark is going to be the closing price tomorrow. Our entry level is going to be that close tomorrow. So if you're a more aggressive average in trader, you're going to be looking to do an MOC order or whatever you prefer. It's always trader's prerogative. And then the second entry level is going to be tomorrow's close minus 100 points. Okay. And then the stop is going to be tomorrow's close minus 200 points. And then our targets, first target, close at day 0 plus 80 points. Second target plus 120. All right. It should be pretty easy to do that math, but again, you do have to wait for tomorrow's close. And if you are a more aggressive average in trader, because you're okay with these risk reward profile down here at the average in area, then you'll be looking to get in at the close. All right, so we got our entries and exits. We've got our risk reward. I gave you the backstory. I think we should be all on the same page. All right. If you have any questions, comments, anything of interest, feel free to reach out to me. I'm going to leave it there. And thanks so much for watching.